If you're a dentist, if you're a doctor that's maxing out your 401k right now, but you're starting to wonder, is this really going to get me to financial freedom? Well, then this episode today is just for you. So today I'm talking with Dr. Mike Mackney, a dentist who used to think just like that, probably like many of us that went to dental school. But instead of waiting decades to retire, he's really started to build wealth sort of outside Wall Street, sort of outside the typical norms that we're taught when we get out of college or dental school or medical school, or and he's even doing this along the way while he's paying off student loans. So that's exactly what we're going to walk through today. So Dr. Mike, thanks for joining me.
Absolutely. Thank you for having me.
I follow your stuff on Instagram. So for those that don't know you or kind of know what you're teaching out there, give us like a little background on who you are and what you do.
Absolutely. So I am from Long Island, New York. Really didn't grow up with any financial literacy at all. Went to state schools because that's pretty much what I can afford. My parents can help me with. Went to Buffalo for dental school. Came back down to Long Island, did residency here. I now live here with my wife. And I more so got into investing around COVID time because I stayed on during COVID to be a chief resident. And for dentistry, I was at one of the major hospitals in the area. So the cases I was supposed to do were these big cases. Full mouth reconstruction, implants, and then all of a sudden, clinics closed down. Offices are closing down. 3 years prior to that, 3 years consistently, dentistry was the ranked #1 career in the country. And that's all everyone would say, like, oh, we're set, it's guaranteed, it's a great income, full-time jobs. Next thing you know, offices are asking for PPO loans because they're shut down. I went from doing possible rehab cases as a resident to now I'm helping with COVID tests at the hospital. So a career that went from very promising in the blink of an eye, you don't know what it's going to entail. Mm-hmm. We're back to basically where it was before COVID. So, but hindsight's 2020. But at the time, I didn't really know what the career was going to really bring us. Like, was everything going to be different now? Certain procedures not going to be the norm. And so at that time, I started thinking like I need like a backup plan. I really didn't do too much investing at that time. I did have my 403B through the hospital I worked at, but pretty much on a resident salary, that's not too much. And that's when I started looking into real estate. So got into it from there, did more complex deals. And then I also started doing more stocks, got more advanced, do options trading. So now I'm kind of like in all realms of the area, but none of it probably would have happened if COVID didn't like kick down the door.
Got it. So for people out there that have gotten out in a sort of a higher paying profession, whether it's medicine or dentistry, chiropractor, law, something like that, in your opinion, when you went through dental school, do you think, so typically when you go to dental school, you kind of know you're going to get out and make a above average income, right? So with that being said, in your opinion, did dental school prepare you how to handle that, like managing money or building wealth or college or anything like that?
Not really. We would have the occasional lunch and learn. But when you're like in the thick of it, like an occasional lunch and learn, most of the lunch and learns when you're in dental school or med school, you honestly attend because you want the free lunch. When you have exams coming up and it's just like 30 minutes in the span of like a 3-month span, it's on the back burner. You're thinking like the income's guaranteed. You see these pictures and videos of like doctors and dentists making good money. But then you get to like the real world and you get to realize that in order to get that kind of money, you're going to have to put the hours in. And there's only so much like you can like keep churning for so long. And you need to start thinking like, I need to start making money without me being there. So, but they never really go over that. The most they would go over when I was in dental school was potentially like how to an employee contract when you're going to be like an associate, but nothing really like investing wise. So I think that's probably the biggest DM I get is a lot of times like from students who are leaving dental school or young doctors who are starting to like see like, hey, the income is good, but there's gonna be a point like where I just can't keep doing this forever. It's like a professional athlete. Like professional athletes get tired of their job, dentists
Right.
and doctors are gonna get tired of their job. Like
Right. So knowing what you know now, what if you go back, if you could go back, what financial lesson do you wish you'd learned before you got out of dental school?
just proper money management. Like that's the first thing. I'm not saying get into crazy detailed things like crazy real estate deals. More so just understanding where your money is going. Um, and the power of just starting early because the only money management I think that people leave dental school with is they just want to pay off their loans right away. Obviously, we all want to pay off their loans, but it's kind of like a two-way sport. Like some teams in the NFL and baseball have a great defense, but their offense is terrible and they don't win. But then there's the opposite: great offense, bad defense, they don't win. You need a balance of both. Yes, you should be paying off your loans, but we should know pretty early how to kind of do the same thing, how to invest in an IRA, the difference between IRA and Roth, traditional, if you want taxes now or later, just the basics.
Hmm.
Because if you start early with the basics and you start getting that mindset that an investor needs, it's a total game changer. But unfortunately, people start learning when they hit the ground running and they're
Yeah.
so stressed out from their first job, they don't even want to bother like learn about it.
So why do you think this kind of education is still missing from these types of curriculums out there? You have an opinion about that?
I think because the education system, at least for dental school, is all boards driven. If it's not on the
Hmm.
boards, they won't teach it. And so, if like most of dental classes, I don't really use anymore. Like histology, I really don't touch. Um, like physiology, pharmacology, like I rarely will dive into that kind of stuff, but it's still taught because it's on the boards. It's I don't know. It's unfortunately like a bad thing because I think also the people in charge don't really understand because they haven't been in the same situation. Because a lot of
Hmm.
people who are in charge of schools or the boards in general didn't graduate with the kind of debt that we have, and so it's hard for them to 100% like sympathize with us.
So you said probably the main reason that you're doing all this different type of investing is because of what happened during COVID, the shutdown, that sort of thing,
Mm-hmm.
right? So, and you mentioned a lot of different things. So what, take us back. So before that, were you just mainly investing like in a 401, just stock market index funds?
So when I was in dental school, I would dabble. My first actual taste in investing wasn't a good one. I would dabble in at that time marijuana stocks were the big hit.
Hmm.
Um, but then that was my first glimpse into penny stocks and seeing like this isn't investing because I lost money quick. Gave it up for like 6 months to a year after that. And then when I got to residency, because it was linked to a hospital, I just had the 403B. And that's pretty much all I was doing at that point.
Hmm.
And at that time, real estate was the hot topic because interest rates were low. So it was all over social media and the news. So I kind of just took the leap. Because like I said, it was kind of a desperation to making
Hmm.
sure like that I had something backed up for me. But from there, I would still do stocks. And then it was later on that I got more into options trading.
So walk us through that first real estate deal, because I mean that's pretty, it's pretty gutsy to go from, right out of dental school, just I'm going to invest in real estate. So what I guess you saw something on social media. Walk
Mm-hmm.
us through kind of your process, what type of asset it was. Do you still have it? What you learned from it? That sort of thing.
So the first deal I got, the way I found it was there's a site called thebiggerpockets.com. It's
Hmm.
basically a large Facebook forum, more or less, but it's its own website. And there's people commenting on different questions. There's different topics. There's podcasts. There's YouTube videos. And in there, you can type in like best cities to invest at this price, and there's forms will come up. And I want to treat my first property like I would treat dentistry. So you don't jump into doing a crown prep until you practice on a plastic tooth. Because if you do a terrible crown prep on a plastic tooth, there's no patient behind that tooth. There's not a human being. And so I wanted something low risk. So I live in New York where on Long Island where the average price is probably like 600,000. So I couldn't do it here because if I mess up on a $600,000 property, I'm probably never going to do real estate again.
Right.
So I decided on choosing Columbus, Ohio, mainly because it was one of those in between cities to where it was cheap, but it was on the rise because companies were moving there. And I decided I also didn't want to do a rehab at that point because, again, it was too risky for me. So the first one I did was a $187,000 property, 25% down. There's also closing costs in there. So within like just that one property, cost me about $50,000, give or take, and it wasn't the sexiest one. I don't have it anymore today because I ended up rehabbing it and using funds from that to rehab another property. So it was my baby. It was the first one, but I realized that I didn't want to keep saving up 25% down, 3% closing costs on something that may not be the best property in the long run. It was scary. It was terrifying, but I had to kind of like take the leap.
Yeah. And you found that property like on the bigger pocket side or something
Oh,
else?
sorry. So on the bigger pocket site, I met an agent, and he was what I like to call an investor-friendly agent. There's a difference between an investor-friendly agent from what I've seen and a residential agent. Those are the ones who are going to sell to the family of four, two kids, dog, picket fence. Those are not the investment ones. Those are the ones, if you want to spend 25% down, you can. But he was helpful throughout the process through this deal and several others, getting me a good off-market deal. And so he was well connected with contractors, with lenders, with wholesalers. So I found him through there. And after you find that one person, just an entire Rolodex opens up. And then they can lead you in so many different directions. All you need is that one person to help you out.
Got it. Yeah, because when I've noticed when you start talking about networking, and the first 12 years when I got out of dental school, I just went to dental meetings, and it's the same thing. You go there, you want to learn, you want to become better, but you really kind of have to for the hours, right? The continuing education hours. So, but once I branched out and started going into different networks, like you're talking about, it's just like things open up, and I connect with this person, we buy mobile home parks together, this person RV parks together. And then looking back on it, like if I would have never branched off, I would have never had that. Is that kind of what you've experienced from branching off from the traditional investing path?
100%. So the main like pushback I had probably originally on doing all this was I don't pay my loans in the full per month. I'll pay the minimum because I kind of did the math one day. So what I do now is like the Burr method. You buy something distressed, you rehab it, you refinance it, and you keep it. So I've done 4 of those now. And I did the math. I was like, if I could put the minimum down in my student loans and then use the rest to a hard money lender to do those for me, I can do the deals well. And when I told people this, they thought I was like psychotic. They was like, it just wasn't the traditional route because leaving dental school with like, the amount of debt that we had, they said like, you're taking on more debt instead of paying down debt. So that's always the biggest mindset change I'm trying to help others with. I'm not saying go into ridiculous debt, but once I start going to real estate conferences and you start seeing how people who make a tenth of us are able to do this, then there's no reason that we can't with our high income. Our high income is a cheat code at this point for investing. Like it just comes down to networking and just thinking a little bit differently than we're ingrained with.
Yeah, because when I got out, you may not even know who Dave Ramsey is, but back then it was just pretty much him and Susie Orman were like the biggest financial people. He talked about his baby steps and all that. So he pretty much teaches the opposite of what you're doing. He says,
100%.
pay off all your debt, not including your house, but pay off all of your debt before you invest. And for me, it took me, I think, 7.5 years to pay off all of our student loans. I didn't want to, I didn't want to miss out on all that compounding of not investing. So, I mean, I think that when we get out of dental school, I think with our income, we should be disciplined enough. I mean, we went to dental school for goodness sake, you know, I mean, we're disciplined, you know, I think we should be disciplined enough to do both, to invest and pay off your loans. You can actually probably pay off your loans if you want to pay off your loans faster. But I do recommend people not missing out because we're already starting behind the eight ball, getting out of dental school or residency later. So for the dentist out there that is going, well, I'm going to wait to pay off all of my stuff before I invest, what would you say to that person?
There was a post, I'm actually going to read it right now. I actually compared two dentists,
Mm-hmm.
one who was going to pay off their loans in full.
And you're posting this on your Instagram account,
I
right?
posted this on my Instagram.
Invest with the DDS.
Invest
Is
with
that
the
correct?
DDS.
Invest with a DDS. So if y'all want to follow this guy, he's got tons of followers. I'm following. Invest with a DDS.
So I said, let's look at two doctors. The first one pays down their student loans in an aggressive manner, pays them off in 10 years. No investments in those 10 years. They're just focusing on paying off their debt, whatever they have.
Mm-hmm.
Doctor two paid down their loans slower than Doctor one, but also invested. He paid them off in 15 years, but he invested $1,000 a month. Doctor two, $1,000 a month for 30 years from age 30 to 60. Just for easy numbers, I did 10% return annual. Total contributions, $360,000. At retirement, he has $2 million. Doctor one, because they started later, they want to be a little bit more aggressive. They did $2,000 a month. For 20 years, they still want to have their retirement by 60. So they're retiring from age 40 to 60 because they started 10 years later. Same return, 10%. They contributed $480,000 because they did $2,000 a month. Even though it was 10 years less, they're still putting more money in for that amount. They end up with $1.1 million. By starting 10 years later, they are contributing $120,000 more, but end up with $830,000 less. And I tell people, it's not even the money aspect of it all. It's the mindset that you have by consistently investing. If you are always on the defensive and just not investing for those 10 years, telling someone who didn't invest for the first 40 years of their life to now all of a sudden put $2,000 in a month, it's easier said than done for them. They're going to think they're going to be so nervous about like, am I going to be more in debt? Am I going to lose this money? When the person who's just putting even a little in per month, doesn't need to be 2,000, it could be 300, it could be 400, it could be anything. They're consistently putting it in. They can even automate it and they don't even know they're putting it in. So I'm always an advocate of, regardless of how much you can put in, put something, put anything, because you don't realize like how much it could be later on.
So let's shift gears a little bit. So do you work like as an associate, or do you own a practice, or?
I'm an associate.
Okay. So for those out there, whether they're dentist, physician, maybe they're in school, maybe they've just gotten out, they're trying to go back and forth. Should I own a practice or not? Give me maybe some pros and cons of both, and what made you decide to do what you're doing.
I honestly never want to own. That's just me. I think I've gotten to the point where I've seen how investing can make you earn money without needing to own. I want to own my own assets with stocks and real estate, but those don't require me being there. And so my boss has done a tremendous amount. He is beyond successful. He is like an idol, but he had to work extremely hard to get there,
Mm-hmm.
where I don't know if I'm that capable as he is. And so I just think the energy and knowing my personality, if I don't always want to be there, I might want to do some options trading when on vacation. I might want to just worry about cash flow coming from real estate, get tax benefits from a short-term rental loophole. I've just found ways to investing that I can make money, save taxes, just like an owner can. So like I just found a balance. Like it gives me a better work-life balance. Some people might want to own because it gives them the pride of ownership. That just doesn't outweigh the other benefits for me as an associate.
Got it. So basically, it comes down to you know yourself better than anybody else, so you
Mm-hmm.
know what's right for you versus somebody else. So sounds like you're saying it depends on the person's personality and their
A
kind of their
hundred
gut
percent,
feeling.
a hundred
Got it.
percent. I just don't want a lot of like young dentists to fall into the trap of saying like that's the only way they can like make money.
Yeah.
Because as I've said to someone before, if you look at the top 10,000 people in this country, the wealthiest, none of them are probably dentists. They're all got there probably through some form way of investing in something. And so I don't want to think that the grass is always greener, because when you get to the what you think is the greener pastures of ownership, it may be what you hate. But instead of leaving like an associate, you might be stuck with it. And so if they really want to own, then by all means, but don't think you have to own in order to build wealth.
Yeah. Or you can buy NVIDIA before it takes
There you
off, and
go.
then
There
there
you
you
go.
go. So let me ask you this: so if somebody watching this right now, and the only thing that they're doing is investing in a 401k, that's pretty much the only thing that they know. What's like the first one or two things that you tell them to do?
I think it's a good start. I think it's better than honestly most. Let's see, maybe they're. I think it comes down to like what they it brings them enjoyment in life. If they find that they really do get enjoyment through like living a nicer home, buying nice things, then we're here for one life, so might as well enjoy it. But if they find that they can like maybe step back a little bit, maybe try to max out their IRAs, put some more into a brokerage account. Maybe if they don't want to do their own real estate, they can do a syndication. They can find different ways to invest other than just their 401k, because every dollar counts in some way. But everyone wants to live kind of like their own like lifestyle and spend money their
Hmm.
own way. So I don't think there's a right or wrong way, but if you can find a way to still live an enjoyable life on your own terms and still want to invest more, I think that's a good way to go. Like go to the IRA,
Hmm.
go to a brokerage account, maybe buy a long-term rental, syndication, anything like that. Lend private money for someone else's deal to get some monthly money back.
Got it. So we were talking a little bit before we started recording about you'd gotten into options a little bit, and I told you that I'd started to, now that I'm shifting more from a growth portfolio to more of an income portfolio because I'm a lot older than you, and some of the funds that I'm getting in are some of the covered called
Mm-hmm.
funds, covered called ETFs, which has forced me to learn about puts and calls and all that. So tell us a little bit about how you're using, maybe break it down first, like what is an option, what's the benefit of it, and how you're actually using it yourself, and then you're kind of teaching it as well. So we'll talk a little bit about how you're teaching others in just a minute.
Okay. So the best way I can really describe when a contract an option is, it's a contract between you as the buyer and a seller for the right, but not the obligation, to own 100 shares at a certain price by a certain date. So an example, like just to make that sound like English, is let's say you want to get a house and you want a house at a certain price. Let's say it's going for $400,000. You get a contract between you and the seller that you can get that price of that house for $400,000 by a certain date, no matter what, based on the price you pay for a contract for that. So let's say you spend $2,000 on a contract between you and the seller for the rights to get that house at $400,000, no matter what. Let's say you have the option to do it 2 months from now. Between now and then, let's say the housing market goes up to a good amount, and that house is now worth 500,000 for whatever reason. And 2 months, just for easy math, your contract between you and the seller that you got for $2,000 could now be worth $5,000, because someone will pay you money to get the rights to that back, because they now can get a house for $400,000 as to $500,000, which is what the market's going for. Because in that contract, it says this house can be bought for 400 grand as opposed to 500, just based on the price you pay for this contract.
Got it. And
So
the person doesn't have to sell the house if they don't want to, right?
once you buy the option contract, they pretty much gave it over to you. So there's like, just like with stocks, there's the lowest price that someone will go and the highest price, and you kind of
Hmm.
on your phone or computer, whatever, you kind of come up with a price of the contract. So you can get an Apple contract that's going to go up from 200 to 205 3 weeks from now, and the price of that contract's $400. You spend $400. If it between now and then it goes up, you don't have to wait for 3 weeks. You could sell it 30 minutes from now. If it starts going up, you might make a decent amount of profit. And the power behind options is you can get a Apple contract for $200. If that stock goes up on Apple 1%, your contract could go up 40%. That's the power with it. If you just own Apple shares, you made 1%. But
Yeah.
if you own the Apple contract, that it's going to go up via call option, puts us the opposite way. It's down.
Hmm.
You get tremendous gains quickly. But you can lose it quickly because the opposite. Let's say news comes out and there's something going on with like legislation and it goes down. You can lose it. But that's also why I use it as a tool and not my entire investment portfolio. Because I have a private chat, so there's about 50 people now. I want to start expanding it for where it's just more than options. But last week, I saw that the market was overextended based on what charts were showing, based on moving averages. I told the chat, get into SPY puts for 2 weeks out from now. And SPY went down pretty good amount on Friday, and the contracts went up 250%. SPY went down 1.5%. But because it went down so dramatically, so fast, the
Hmm.
contracts were dramatically more than what I paid for them.
Got it. So your community, tell us a little bit about it. What's involved, how people learn more about it, that sort of thing. What kind of things that y'all talk about?
So when I started posting some things in my story of like different things I got into, some contracts, I would just put it on my story. But a lot of people were interested in a group chat because it's hard for someone to get the exact alert that I got into unless they go into Instagram, check my story, and then it might have gone up or down and they missed out on it. So
Yeah.
I have a Discord, just like a group chat. I'll put
Hmm.
in what I'm seeing. I'll give the reason behind it. I'll give the charting rationale. I'll give everything behind it. It's not just me putting it into like a meme stock. And they get the alert. They go in. I tell them when I get them out. And it's up to them if they want to get out. And it's growing decently fast now because I'm starting to show that I love this stuff. If I can look at charts all day, I would. And it's becoming like I look for the same exact things over and over and over. So charting sounds like it's like voodoo stuff, but there's a book called How to Win Money in the Stock Market. It's like the most cheesy title, but it looks back to the 1800s of charting. And it's the same things over and over and over again, that things happen at certain levels because big money, like hedge funds, are hanging out at certain levels. And if you can start identifying where these levels are and just get in for a tiny piece of that movement, then you can make a decent amount. So I'll put in the chat what I got into. Was it a call or a put? What stock was it? How far out am I going? What was the costs? And then my rationale for it. And then I'll let them know. I enter, exit. And it's becoming more so now, not just alerts. It's becoming like a community. Like there's people I text in there and talk to with more than like some of my friends. It's becoming a collection of like, we win together, we lose together. And it's become fun.
You doing anything else like real estate, or are you just doing all just mainly stocks and options and that?
So I'm going to make the transition because people follow me for different reasons.
Hmm.
And I don't want to just be like, here's my options Discord, and they don't want to do options. So I'm going to have something soon to where during this past Christmas, I recorded a bunch of videos. I have 5 different like course laid out material. I have one for stock market investing, very much goes over brokerage accounts. Real estate investing goes over the regular stuff that every real estate newbie should know. Burr investing, basically what I did before, like I said, like get hard money, find something distressed, and then options course, and then a charting course. All that combined is about 16 hours. So I'm going to give everyone that would be in the chart, that I mean in the course, that information. We would have like 2 weekly calls to where we would go over something investing related, or honestly just like a community call to where like we air out our grievances just about life in our career. And so I want to make it a more community feel. And then if people need to reach out to me with a real estate question, they can do it in there. And it's just become an area where I'd rather have it in there than a Facebook group to where people might like miss a notification. It's just, this is like everyone being texted individually. All I have to do is just, I tag at everyone, and everyone gets the same exact message at the same exact time, and they can respond to it. They don't have to lose something through an email. It's just download the app and it's easy peasy.
Got it. So we'll put, I guess you can give me the link to that. I can put it in the description below
Absolutely.
this video. Awesome. Well, I really appreciate your time very much. You're doing some incredible things. I wish I'd have listened to you over 20 years ago when I got out of dental school, because all I knew to do was the Dave Ramsey way. But it's great that not only basically you're practicing what you preach, because a lot of times people will say, hey, you should do this or that. And you'll say, well, are you doing it? Are you investing in it? I'll say, well, no, I'm learning about it. But you're in it. You're in the trenches doing it. So I commend you for that. So before we go, any parting words that you would give to the young dentist or doctor out there?
Just be patient with it. I know we're just investing in general. It's going to take a long time to kind of like change that mindset from, especially to change to the real world where everything is regimented. You do this, get this grade, do this, get this grade. Investing's not like that. You're playing with real money now, not just like a grade. So some days you're going to lose money, some days you're going to be up. But over time, investments do generally, unless you're going some crazy investment, they're going to go up. And you don't need to you don't have to keep delaying gratification. I know you've been doing it long enough as a young doc. You just need a small amount to build that. Because like going back to Dave Ramsey, he would talk about the snowball effect, but he would talk about for debt. You can do the opposite. For compound interest, the growth. Start little, and then you look 10 years back and you're so happy you got started.
And then I like to use it for passive income, like a passive income snowball. Just start off with just get that first $100 a month coming in, and then it turns into 200, 500, and then it just rolls from there. It's pretty incredible. It's kind of addicting, once you start doing it.
It is. It's like any other like habit. It's like going to the gym. It's like seeing like anything, you hate doing it at first, but the moment you just kind of let time do its thing and you just trusted the process of just like getting better at dentistry. Like everyone hates their first filling. Everyone hates trying to get their first like number 15 out. It's just one of those things where you hate it at first. You trust the process. You're not going to be better by day 1, day 2, day 50, but 3 years later, you're going to look back and like just wish like you got started a little bit earlier.
Awesome. Well, guys, Instagram, follow this guy, Dr. Mike. It's Invest with a DDS. And then we'll put the link to his community below. Appreciate you hanging out with us. You're doing some great things.
Thank you, Jeff.